Your problem is not that you don't know enough about the market. It's not your indicators. It's not your strategy. It's not that you haven't found the right system yet. Your problem is that you don't understand why rules exist. And until you understand that deeply, not intellectually, but psychologically, you will continue to sabotage yourself no matter how good your setup looks on paper. I've spent decades watching traders, not just studying charts, studying people, watching how they think, how they react, how they behave under pressure. I've seen traders with brilliant strategies fail consistently, and I've seen traders with very average systems perform exceptionally well. The difference was never the market. The difference was always the mind behind the decision. So let's strip this down to its core. Trading is not a technical game first. It is a psychological game first. Always. You can learn entries, you can learn exits, you can memorize patterns, but none of that matters if, in the moment of decision, your mind overrides your plan. And it will. Unless you understand why rules exist. Because rules are not there to control the market. Rules are there to control you. Not the price, not the volatility, not the outcome. You. That's the part most traders don't want to hear. They want more information, more tools, more confirmation, more certainty. But trading does not reward certainty. It rewards discipline under uncertainty. And rules are the structure that make that discipline possible. Let me explain what's really happening inside your mind when you trade. Every time you look at a chart, your brain is not just analyzing data, it is interpreting risk. And your brain is wired for survival, not for probability. That means it will constantly try to avoid discomfort. Not loss, discomfort. Those are not the same thing. A small controlled loss, part of your plan, is psychologically uncomfortable. So your brain resists it. It tells you to move your stop, to give the trade a little more room, to avoid being wrong. And in that moment, you're no longer trading your system, you're protecting your ego. This is why rules exist. Because without rules, your decisions are not based on logic, they are based on emotion. And emotion in trading is reactive. It is short-term. It is impulsive. It is inconsistent. Rules, on the other hand, are pre-decided. They are created outside the emotional moment. They are calm decisions made before the chaos begins, and that is their power. Now let's go deeper. Most traders believe they break rules because they lack discipline. That's only partially true. The real reason you break rules is because in the moment, the rule conflicts with how you feel. You don't break rules when it's easy to follow them. You break them when following them feels uncomfortable. So the issue is not the rule. The issue is your relationship with discomfort. Let's look at some of the most common mistakes traders make and the psychology behind each one. First, moving your stop loss. On the surface, it looks like a strategic adjustment, but psychologically, it's avoidance. You are avoiding the emotional pain of being wrong. You are delaying the moment of acceptance. You are saying, not yet, maybe it will come back. But the market doesn't care about your timing of acceptance. It moves regardless. And every time you move that stop, you reinforce a dangerous habit, that your feelings are more important than your plan. Second, cutting winners too early. This one confuses a lot of traders. They think greed causes losses, but in many cases, it's actually fear that limits profits. Fear of giving back gains. Fear of being wrong after being right. Fear of uncertainty. So you close the trade early. You lock in something because something feels safer than letting it play out. But trading is not about feeling safe. It's about executing a probabilistic edge over time. And when you cut winners early, you destroy the math of your system, not because of one trade, but because of repetition. Third, overtrading. This is not about opportunity. This is about stimulation. Your brain craves action. It wants to feel involved. It wants to feel productive. It wants to feel in control. So you take trades that aren't there, not because your system says so, but because sitting still feels uncomfortable. And again, you see the pattern. Discomfort leads behavior. Not logic, not rules, discomfort. Fourth, revenge trading. This one is pure emotion. You take a loss, and your brain interprets it as a threat, not financially, but psychologically. Your identity is challenged, so you react. You try to get it back. But you're no longer trading the market. You're trading your emotions. And emotional trades are not calculated. They are impulsive. They are inconsistent. They are destructive. Now here's the important part. None of these behaviors are random. They are predictable. They are human. And they are exactly why rules exist. Rules are not restrictions. They are protection. They protect you from yourself. Not from losing trades, from destructive patterns. Because losing trades are part of the game, but breaking rules, that's what turns normal losses into catastrophic ones. So the question becomes, how do you actually follow rules? Not in theory, but in reality when it matters. The answer is not willpower. Willpower is unreliable. It fluctuates. It depends on mood, energy, stress. You cannot build a trading career on something that unstable. What you need is structure. Structure reduces decision-making. Structure removes ambiguity. Structure makes the right action the default action. That's what rules are supposed to do. They are not guidelines. They are boundaries. Clear, non-negotiable boundaries. Entry criteria, exit criteria, risk parameters, position sizing. Not flexible, not emotional, not situational. Defined. Because the more decisions you leave open in the moment, the more room you give your emotions to take over. Now, let's talk about something deeper. Probability. This is where most traders intellectually understand, but emotionally reject. Every trade is uncertain. Every single one. Even your best setup, even your highest probability trade, there is no guarantee. And your brain hates that. It wants certainty. It wants to know what will happen, but trading does not offer that.
So what do traders do? They try to create certainty. They add indicators. They wait for confirmation. They hesitate. Or worse, they override their system because this one feels different. But it's not different. It just feels different. And feelings are not data. Rules exist to anchor you in probability. They remind you that your edge plays out over a series of trades, not one. Not this trade, not the next trade, but many trades. And that changes everything. Because when you truly accept that, you stop obsessing over individual outcomes. You stop reacting to every win and loss. You stop making decisions based on what just happened. And you start focusing on process, execution, consistency. Now let's talk about ego, because this is the silent force behind most rule breaking. Ego wants to be right, not profitable, right. There's a difference, a big one. Following your rules means accepting losses. It means being wrong regularly. And ego resists that. So it pushes you to override your system, to improve trades in the moment, to prove something. But trading is not a place to prove anything. It's a place to execute, quietly, repeatedly, consistently. The traders who last are not the ones with the best predictions. They are the ones with the strongest discipline. The ones who can follow their rules even when it feels wrong, even when it's uncomfortable, even when they just lost, because they understand something most traders don't. Success in trading is not about what happens today. It's about what happens over time, weeks, months, years. And over that time, consistency beats intensity. Always. One perfect trade means nothing. One bad trade means nothing. But consistent behavior, that compounds, both positively and negatively. So if you break your rules occasionally,
That's not the problem. The problem is what that behavior becomes over time. Because habits are built through repetition. And every time you override your system, you strengthen the habit of inconsistency. You train yourself to trust your emotions over your process. And that is the most dangerous pattern in trading. So what does success actually look like? It's not a big win. It's not a perfect week. It's not catching every move. Success is boring. It's repetitive. It's structured. It's doing the same thing over and over, regardless of outcome. It's taking the trade when your rules say, take it. It's not taking the trade when your rules say, no. It's accepting losses without reaction. It's letting winners play out without interference. Not this, not excitement. Not that, not constant action. But this, controlled, disciplined execution. That's what works. That's what lasts. And that's why trading rules exist. They exist to remove you from the equation, to reduce your influence, to limit your emotional interference. Because the more you interfere, the worse your results become. Not immediately, but inevitably. So here's what I want you to reflect on. Not your strategy, not your indicators, not your win rate, your behavior. When you break a rule, ask yourself why. Not on the surface, but honestly. What were you feeling? What were you trying to avoid? What were you trying to control? Because that's where the real work is. Not on the chart, but in your mind. And once you start seeing that clearly, everything changes. You stop searching for better systems, and you start building better habits. You stop chasing certainty, and you start accepting probability. You stop reacting, and you start executing. And over time, that shift is what separates those who survive from those who don't. So the next time you look at your rules, don't see them as limitations. See them for what they really are. A framework for consistency, a defense against emotion, a structure for long-term survival. Because in trading, you don't rise to the level of your strategy. You fall to the level of your discipline. And discipline is built on rules. Follow them. Not when it's easy, but when it's hardest. That's where the difference is made. That's where real traders are defined. And that is why trading rules exist.